Hey friends, welcome back to the channel. I'm Iggy, and I've been covering stocks, finance, CPF, and everything related to growing your wealth right here in Singapore. The investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We just crossed the 1 million mark for reads and 58,000 likes. I've produced over 900 videos with more than 500,000 watch hours as of June 2025. I also focus on regional and global economic trends. Today, we're dissecting the Straits Times Index action for Friday, July 25th, 2025. In our segment, Iggy's STI Movers and Shakers. The STI closed down 0.3% to 4,061 points on Friday, retreating slightly from its recent record highs, near 4,074 points. This pullback comes after an impressive 14-session winning streak that saw the index climb over 250 points. Market breadth remained positive with 335 advances outnumbering 245 decliners on trading volume of 2.2 billion shares worth 1.8 billion Singapore dollars. Let's dive into the day's biggest movers, starting with our top 5 gainers. First up, ComfortDelGro jumped 6.49% to close at $1.64. The transport giant has been a massive laggard this year despite delivering respectable earnings growth and offering a dividend yield near 6%. Friday's surge came after Maybank highlighted the stock as undervalued, and analysts expect strong second quarter results on August 13th. ComfortDelGro is also benefiting from new taxi fee structures that should boost ancillary revenue. For CPF investors, this looks like a catch-up play with solid dividend support. Next, City Developments gained 2.9% to hit $6.38, reaching a 52-week high. The property developer continues riding momentum from boardroom changes and Singapore's red-hot private home market. CDL's price-to-book ratio still sits below 0.6 times, making it attractive to value hunters. However, watch for any cooling measures from the government, as real estate counters often run ahead of policy changes. DFI Retail Group advanced 2.09% as grocery and pharmacy operators benefited from a global rotation into defensive consumer staples. With inflation finally moderating, DFI's margins should stabilize while footfall at cold storage and Guardian remains strong. The 3% dividend yield provides decent income for conservative investors. Jardine Matheson climbed 1.38%, supported by its ongoing $1 billion share buyback program. This conglomerate offers exposure to everything from Indonesian auto sales through Astra to premium Hong Kong office space through Hong Kong land. The question remains whether management can finally unlock value from this complex structure. Rounding out our gainers, ST Engineering rose 1 to 5%. The defense contractor continues attracting yield hunters with its progressive dividend policy and an order book stretching beyond 7 years. Recent defense electronics wins and smart city projects provide growth optionality for long-term investors. Now let's examine Friday's biggest losers. Semcorp Industries dropped 1.5% to $7.72 after its meteoric 66% year-to-date gain. Some profit-taking was inevitable following such a massive run in the renewable energy space. Investors await Semcorp's half-year results on August 8th for clues about future growth. While the energy transition story remains intact, expect some volatility until the next earnings catalyst. Genting Singapore fell 1.32% as the casino operator faced concerns about softer mainland Chinese tourist numbers and potential changes to gaming levy rules. The Resorts World Sentosa operator remains sensitive to tourism flows and regulatory changes, though the IR 2.0 expansion should eventually unlock more capacity. Wilmar International declined 1.31% as palm oil futures slid on record Indonesian output, pressuring the agribusiness giant's refining margins. Commodity stocks remain notoriously volatile, making Wilmar suitable only for investors comfortable with cyclical earnings swings. Yangzijiang Shipbuilding dropped 1.24% despite having a strong order book and net cash position. The shipbuilder remains vulnerable to U.S.-China trade tensions and tariff uncertainties, even though recent U.S.-Japan trade deals suggest a more measured approach to tariffs. Singapore Airlines closed down 0.73% as rising jet fuel prices and normalizing travel demand weighed on sentiment. While SEA remains a quality airline with strong premium cabin yields, investors are taking profits after the post-pandemic recovery rally. For deeper analysis of these market moves, including detailed financial metrics, technical charts, and my complete investment thesis for each stock, check out the Investing Iguana Substack. Premium subscribers get comprehensive breakdowns and real-time alerts that you won't find anywhere else. Looking at the bigger picture, Friday's mixed performance tells an important story. We're seeing rotation from high-momentum growth stocks like Semcorp toward defensive value plays like ComfortDelGro. This shift suggests investors are becoming more selective after the market's impressive run to record highs. The STI's pullback from 4,074 points appears healthy after 14 consecutive sessions of gains. With the Monetary Authority of Singapore Policy Review approaching and ongoing U.S.-China trade negotiations, some consolidation makes sense. The key levels to watch are support around 4,200 points and resistance at the recent 4,174 peak. As long as the three local banks maintain their strength and Singapore's safe haven status attracts regional flows, the medium-term outlook remains constructive. My take is simple. Use any weakness to add quality names with strong dividends for your CPF portfolio. Keep some powder dry for opportunities, but don't fight the overall uptrend. Singapore's market has demonstrated remarkable resilience, and the combination of solid fundamentals plus regional capital flows should support higher levels over time. So, we've broken down today's July 25th, 2025 STI movers and shakers, and I've given you my personal take on what it means for your investments here in Singapore. If you found this video helpful and want to seriously level up your investing game, please give it a like, share it with your friends, and subscribe to the Investing Iguana channel so you don't miss our next insights. And for those who want to be truly ahead, our premium members gain exclusive early access to all our videos, often a full week before anyone else sees them. This means you get Iggy's detailed analyses and urgent insights on major market moves directly to your inbox, giving you a significant head start. It's just $1 a month, less than a cup of coffee. Think of it as your consistent daily dose of financial fuel for smarter decisions, delivered before the masses. Ready to join the inner circle and get that early edge? Just click the link in the description below to become a premium member today. Check out our next video on Sector Rotation 101 to learn how you can position for the coming quarter. Until next time, stay smart, stay invested, and keep that iguana spirit alive.